But we got three great speakers. We appreciate them coming out, taking their time to share with us. I don't have a bio for these guys. I should have got one. I didn't know I was going to announce the speakers, but I think most of you guys know these guys. We've got James Allbee with Cheyenne, Jeff Frederick with Staghorn out of Tulsa, and Mark Castell with Trailblazer out of Tulsa. So with that, let's just kick off. Do one of you want to volunteer to go first? We didn't have a pre-picked order. James, come on up. And you get to go some extra time now because there's only three speakers.
That's what I was looking forward to.
Let's give James a hand. So, thanks, buddy.
Yeah, what a great turnout, guys. I'm really excited to join these. I talked to John Ungert, and when he first talked about this, I get such a benefit from coming to all the events, SPE, API, golf tournaments, and so I appreciate the opportunity to speak to you guys right now. You know, a lot of friendly faces, and I probably know at least 50% of you guys right now. So it's a small enough world, and you know, really neat to be here. But anyway, so going beyond that, you know, for those who don't know me, I've been in the industry for about 28 years. I started with Dowell up in Southwest Kansas, and you know, gosh, I thought it was right next to Colorado and skiing and mountain biking, and they lied to me. I'm telling you this. But it was a great place to start a career, and 28 years have gone by really fast. Most of my office work has been here in Oklahoma City, and you know, consulted for a while at Devon, and now about 4 years with Cheyenne. So the Cheyenne story is pretty interesting. I think you know, we're a really small group of people. The technical staff is all here today, so it's kind of fun to say that our hallways are really where the meetings happen. And as Eric says, that's our intercom. You know, you just kind of yell down the hall, and you know, that's very unique, and certainly compared to some bigger companies. You know, but it's been a great place to be for a while. Bill Spurgeon, who some of you guys might know, is retiring this month. So thought I'd just put a plug out there. If you didn't know that and know him, reach out and wish him well. He's been a great leader for more than 20 years. He's probably been there 23, 24 years at least. So he's the reason I think we're still around, and he's been a really good person to have. But anyway, as far as Cheyenne goes, the company's been around since 1973. So my calculator says that's about 50 years, which is pretty long time to be around. Interesting tidbit for Cheyenne was that they started off basically with low oil producing wells in Oklahoma, operated them, and you know, had a pretty big presence in Oklahoma for a long time. Transitioned to more of a non-op investment opportunity, and then about 2008 is when shifted a lot more to operated production, mostly in South Texas. And that's another interesting story. I just learned this about 3 weeks ago. It was actually set up to be a gas play, and it was in just south of San Antonio. You know where I'm going with this. The operator backed out. It was all deep gas wells. Well, about that same time, a couple people started talking about the Eagle Ford, and just, you know, what a fortuitous time. Here we go. We're now Eagle Ford players, and we didn't even know it. I think that's a neat story, and you know, since 2008, that's been our main development area. All horizontal wells, mostly Eagle Ford. We operate about 130 wells right now, and you know, have two main fields down there. So you know, that's been a big part of where we're at, and where we're going to continue going forward. You know, when I think about, I need to fix my bifocals here. Hold on. You know, we own the surface and a ranch down there as well. So it's been interesting because that affords us some other opportunities, and one of them is us trying to look for frac sand, and that's been a neat thing. We're trying to see if we have something viable there, and you know, it looks like, at least initial results, we've got good enough sand, and you know, certainly compared to some of the stories I hear, people just digging it out of the side of the road and pumping it. You know, we're a lot better than that, I'll tell you. But you know, still have to see where it goes. But that's been a really interesting area for me. I hadn't worked the Eagle Ford before, and you know, and then our other operated areas in southern Oklahoma, you know, Southern Scoop down near Velma, basically, and we've got 11 company-operated producing wells right now, and that's really where our activity is going to continue going forward. You know, we've got a drilling rig going there through next year, or at least into next year. 3 completions at the end of the year. and then it'll be probably Q3 when we complete the 6 future wells we've got. So, again, kind of linking up, trying to make this a little more interesting for you guys. Ask why does Cheyenne need to come talk about this? And Oklahoma's a big growth area for us, and it's an interesting story for that Velma area. When you look at the story, keeps getting played over and over again. That Chauveltum field was developed many years ago. You guys probably know 100 years, I think, something like that. And early on in my career, when I was in El Reno, we fracked some Texaco wells, and, mobile wells. Neat area. So once again, you go to where a good area is at. There were already some existing horizontal wells. They weren't that great, and I used to, you guys probably heard the term statistical play. I think that's kind of what those wells were known as, just because you had to hit a fracture. You had to hit a good fracture, and they turned into good wells. Well, here comes just in the last several years, the newer completions and drilling style comes along, and it's really turned the tide. So it's revived that area. I'll see Rick. Where's our wildcatter? I think he might have stepped out. He's probably looking for another play. But he started looking around the merge, and he's really been one of these guys that he saw the Great Woodford Kitchen and then Sycamore sitting on top, and thought maybe this has got something to go for. And so it's been neat to see that go. And how many other plays are there in Oklahoma like that? I think we want to encourage everyone, because our story is probably not as well known being privately owned. But I'm sure there's a ton more out there. So go find where the last well was drilled 100 years ago, and let's go find some more big wells. I think as far as activity goes, our philosophy is that we're going to live within cash flow and live within our means. We have a lot of great opportunities, I'd say, and the challenge is just how you fit them all in. So I'm probably saying the same thing everyone goes through and wrestles with. Eric is our development vice president. He doesn't sleep very well when he's got to make these decisions. I'd love for him to sleep better, but we've got some good opportunities and just how to fit them in. In 22, we basically had plans to continue in both Oklahoma and South Texas, as an example. And service prices were going up, uncertainty about where the oil price was going, and it started falling down. So paused our activity in South Texas for now. Hope to pick it back up in about a year, roughly, or somewhere in that range. So in the meantime, we're trying some refracts, and so we're actually working on them right now. We're using a 4-inch flush joint in 5.5-inch casing, cementing it, plug and perf. A lot of other folks have talked about that, but new for us, and pretty neat to see. I think Oklahoma has a lot of potential as well. So I encourage anybody that wants to talk about what we're doing later, feel free to get in touch with me, and I wish I had results already. I think they'll be good. And now it's kind of crazy. We're seeing softer service prices, and heck, $90 a barrel. What the heck's going wrong? Why aren't more people drilling? I'm sure you guys all have the same thoughts, and I think it's just the cycle is so uncertain. For us, if we could line up and guarantee 2 years worth of $100 in oil, we'd probably have 3 or 4 more rigs out there, and hopefully we all feel the same way. But anyway, I definitely, time's up. That's good. Well, good. Well, I will wrap just by saying I'm really appreciative of the time and friendship for all of you guys. I think for me in personally, and then also for our company, we value teamwork a lot, and our contractors, vendors, really our partners. Again, like I said at the start, I love these events. I can't get enough out of seeing friendly faces, and I'm just glad nobody has any rotten tomatoes to throw right now. Or if you do, throw them. I'm ready. But thanks for cooking, and thanks for the invite, guys. I do think that anything that we have to share, we'd love to share with others. Yes, sir.
So for everybody that has questions, this is about leadership and the future of our industry. Say you're standing in front of your teenagers getting ready to go to college, what would you advise them to do to try to draw them into oil and gas? So what do you see as our future 5, 10, 15, 25 years from now for companies like yours?
You know, that's a great question. I probably would, I've got 3 daughters, and you know, at least 2 of them have a good head start in the medical field, and you know, I don't know that we'd turn very much. I can't say enough about the friendships that are here. The people that are in the industry are probably the biggest thing I would say. You know, we all have different answers probably to that same question, but I've been very lucky, you know, to stay continuously working in the industry, and I think that's the challenge. But finding something that makes that person valuable, you know, and being willing to take on new challenges, I think would be the first things I would say. But good question. I needed a softball though. No, I thank y'all.
Any more questions for James?
Thank you, James. Last chance. Any questions for James? Nope. Good job. Thank you. All right, Mark, you're sitting here, so we'll let you go next.
Good afternoon, everybody. It's great to see some faces I hadn't seen in a while. I used to make it over to OKC a lot in 5 to 10 years ago, something like that. Now I make it more down to Texas, and I'll tell you that story here shortly. But it's great to see a number of people I hadn't seen in a few years. So thanks for the invite. Thanks for allowing me to tell everybody the Trailblazer story. A little bit about me personally. I was born and raised in New Orleans. I went to Texas A&M University, and I've lived in Oklahoma 14 years. So I just call myself confused a bit. Really live in Tulsa, Oklahoma, headquarters for Trailblazer in Tulsa. All of our assets are down in Texas. So we currently operate in South Central East Texas. So if you're familiar with the I-45 corridor, so from Caldwell, Texas, over through College Station, over towards Madisonville, and all the way over to Crockett. So that's kind of our geographical area. We'll soon be expanding a little bit more southward. In a few weeks, we'll probably be announcing some more growth things that we're doing down in southern Texas. So 100% run all of our technical and accounting side of the house in Tulsa, but 100% of our assets are down in Texas. So I'll maybe start by answering that question the gentleman asked there, kind of my 2 cents on what I would tell young people coming into our industry. I was having a beer with a high school buddy like 2 years out of college. And he was a mechanical engineer working for General Dynamics at the time. And he was working on F-16 wing design or whatever the latest fighter plane thing was. And I've been 2 years out in the industry working South Louisiana, South Texas, offshore Gulf of Mexico. Had drilled 20 wells, done 50 workovers, and et cetera, et cetera. And when I asked him what he did in that 2-year period, he said, well, we've been doing all these simulations and all this wind tunnel work and going back and doing calculations. And I said, well, when is that plane going to fly? And he said, about 5 years from now. What I think our industry always offers to young people is immediate impact. You get to see the fruits of your labor very quickly. You work on projects, you work with people, you learn things very quickly, and you can see a lot of different projects in a very short period of time. That's what I like about our industry. I'm not the most patient of people, and I wouldn't be good working for NASA or working for General Dynamics. That's the way I try to tell young people, if you want to see some of the fruits of your labor very quickly and you want to work with great people, come join the oil industry. So that's the way I talk to young people about. So we have 32 employees in our company right now. I've worked in that size company for probably the last 15 years or so. 21 in the office in Tulsa, 11 down in the field. We have a couple of field offices in places that if you don't know Texas well, you probably never heard of these places. Normandy, Texas, and Weldon, Texas. Normandy, if you've been traveling on I-45 north of Houston, if you know where the Buc-ee's is, we're right across the street from the Buc-ee's on the other side of the interstate. So most people do know where that is. Weldon sits between 2 state prison farms in Houston County, Texas, going towards Crockett. So we operate about a little under 200 wells And like I said, we go all the way from Caldwell, Texas through College Station over to Madisonville and all the way over to Crockett or thereabouts. Let's see. We have one investor, one owner, to go along with the employees, obviously. Our investor is Mill Street Capital. They're out of Boston. For those, I don't know if there's anybody here from Chaparral, but the old Chaparral, now called Canvas, they're the same investor for that organization as we have. They're a great group of folks, been working the oil and gas industry for a long time and investing in the oil and gas industry for a long time. They actually bought out 2 other interests in the past year of our company, and now control 100% of the investor interest. So Mill Street and all of the employees are who own our company now. So it's important. I think everybody knows this, but it's important to have the right kind of money. One of the reasons that Mill Street has the controlling interest now is that we had a party that was one of the lead investors that essentially decided they didn't want to be in fossil fuels. And that's happened a lot lately in various things. And so our lead investor now took advantage of that opportunity to buy them out and to do, in my opinion, a very good business deal. So we grow both by the drill bit and by acquisitions. So we'll drill probably 4 wells this year. All of them are Eagle Ford horizontal, so we're up in the what are referred to as the eastern or northeastern Eagle Ford trend, so as far north as you can get in the Eagle Ford. For those that know Chesapeake's former assets that they sold to Wildfire, that's our backyard for Eagle Ford. So it's Burleson County area. The old Giddings Field is the primary area that we do most of our Eagle Ford drilling in. Like I said, we've averaged about 1 significant acquisition per year. It's always important, I think, to marry growth with both the drill bit and the acquisition front. So we've been good at that. Like I said, we're hopefully going to be closing one here in a couple weeks. So looking forward to that. We're really somewhat agnostic to oil versus gas investment. We're somewhat agnostic as to where to put our money. We just want to look for good returns and in places that we know that we can grow things. So location's less important to us than what we think we can do in terms of returning capital. We have so we have Trailblazer Energy Resources, which is the E&P company. We also have a midstream company, Trailblazer Energy Midstream. And so we believe in owning some midstream assets also. So we do gather other people's gas in our area of operations. And we like to marry both the midstream and the upstream. And that's one of our stated growth areas is to also increase our midstream capacity. Talking maybe a little bit about our industry and where I think it is now and where I think it's going. It's a unique time. A lot of people are investing and staying within cash flow. I think that's good for our industry in general. Give you a feel, I worked for a major for about 10 years. And that major this year, I saw in their reporting, is going to reinvest about 50% of their capital back into the oil and gas exploration. When I worked for them for 10 years, it averaged around 110%. So what people are asking the oil and gas industry, the large companies, the large independents, the majors, they're asking them to currently be the utility investment in their portfolio. So they want a guaranteed return. They want good dividends, buyback of their stock, and they want it to be a fairly unrisky piece of their portfolio, which is weird in the oil and gas business because we all know how much risk there is in the oil and gas business. But that's what's being asked, and that's what's being rewarded in the public markets. So to me, what that means, with those types of reinvestment ratios, we're going to see somewhat steady pricing across the board for a long period of time. And I think that's good. It's good from a number of reasons. What I've seen in my industry experience is that once you have steady, flat pricing for a while, that usually tends to lead towards more transactions, more companies buying other companies. So when things are going up and down, it's always hard to get acquisitions and divestitures done. When things are flat, that's good. That's good for the small independent, right? Because what are the small independents in business to do generally? Get something, grow it, and sell it. I think there's going to be a lot more transactions across the board with the industry kind of staying at a flat level. And I think that's great for everybody that's in the smaller market that, you know, is like you just talked about, and that's your business plan, is to get something, create some more value out of it, and then sell it. I think we're going to have that opportunity a lot more if we continue with this capital restraint, if you want to call it, by the majors and the large independents. So I think it's great for the small independents, personally. I get asked what do I think oil and gas prices are going to do. That's always a really tough question to answer. Historically, I stay away from predicting oil prices. There's just too much that goes on in the world on a daily, monthly basis to try to predict what's happening oil price-wise. So we tend to make investments based on oil on strip pricing. We do tend to make investments because we understand gas markets a little bit better because it's a lower 48 market. We will take some risk on, if we think gas prices are rising, we'll take more risk on an asset to buy an asset when we think we're in a rising gas market, or vice versa, stay away from something if it's a lowering gas market. I think overall, I'm not going to comment on oil because I have no idea what it's going to be doing. I think gas will recover. I think we're in a 1 or 2 year cycle in which we're going to start seeing gas prices recover. So I think investing in gas properties at this time is something that we're looking to do, and I think a lot of people share that same thought as myself. Maybe just close a little bit on kind of my business principles, if you want to call them. Like I said, I love working with small teams. We have one of everything and two of nothing in our office, which is great when you're talking about projects and you're going around the table. Everybody knows what their job is because they have that role and they understand their responsibilities. And that's fun. That's a fun place to work when you have that type of a setup. My three basic principles is I like to surround myself with people that are really good at what they do. I call it getting the laundry done correctly, washing it correctly, cleaning it correctly, drying it correctly, folding it and putting it away, getting the day-to-day business stuff done right and done right the first time. We've got a lot of great people in our industry, and there's a lot of capable people that do a very good job of that on a routine basis. Second principle is I like that to be done in very much a team environment. I've just seen so much value come out of good teamwork within the multiple disciplines that we have. All the professionals sitting around the table throwing out ideas on a project, having one of those ideas stick, something that we maybe wouldn't think about if we would have just been behind our desk. That's what's beautiful about the oil and gas business. Somebody thinks of new technology, a new way of doing things, whatever it might be. I really think that teamwork pays. And I've seen a lot of great ideas come out and a lot of value generated with a very strong team environment. And then lastly, it's because teamwork is so important to me personally and the people that I work with. I really believe in the golden rule. So, treat others like you want to be treated. I've only seen teams seem to fail when you've got somebody that can't work as a good teammate. And that's where I've seen teams fail. So it's very important that everybody respects everybody else in the team. We all have differences of opinions, but at the end of the day, we got to drill a well or we got to produce a well, we got to make a decision and do it that way. But if everybody's involved in that decision making and everybody's thinking about it professionally with each other and treating each other professionally, I found that those teams are the most highly performing teams. So that's a very important principle to me, is living by the golden rule within our office environment. So that's really, I think, all I had. A little bit of touch on everything. I think I'm very bullish about our industry for the next couple of years. I know Oklahoma's suffering right now because we're such a gassy state, but I do think things are flipping relative to gas markets. I think we'll have an uptick in activity in the next couple of years. Anyway, look forward to talking to some more people today that I haven't talked to previously, and I'll throw it out for any questions there might be.
I got one.
Go ahead.
So there's been some press about deep Bossier, Comstock, etc. That's the fairway you're in, Madison Roberts. What's your opinion? Is it real? Is it going to be an extra play down in that area? What are you thinking?
The Bossier, Haynesville, and Robertson, Leon County is very real, and it's very big. It's going to be the hottest natural gas play for the next 5 years. We are in it. We're looking at numerous ways to extract value out of it. There's another couple of Tulsa-based companies that I know of that are in it also in various forms or fashions. I'm sure there's a number in OKC. It's the real deal, in our opinion. It's neat. It's very hot. It's very high pressure. It's some of the more challenging wells you'll ever drill in the onshore U.S. So it's got a lot of work you got to do, and you got to do your work. You got to do your work well. But yes, it's our opinion that it's the real deal. All righty. Any other questions? Thank you. Thank you, Mark.
Scott, would you have the cookers come up here real quick before too many people get away, and let's recognize these guys. You want to say anything? No, thank you guys for coming out. We underestimated how many we'd have, but these guys took care of it, and I think I got the last hamburger, and that was the last one through the line. Real quick, I had a manager at Halliburton, Mark, who was a really good team player, and he always made a point that said he was the ultimate team player. As long as he got his way, he was the ultimate team player. So with that, it's all yours.
Thank you. All right, good afternoon, everybody. I'm Jeff Frederick. I'm with Staghorn Petroleum. I guess I will say, as a recipient or a historical recipient of a scholarship, an oil and gas related scholarship, I definitely appreciate the fundraiser that's here and the golf tournament that the API puts on, because it does make a difference. And I'd probably be here if I hadn't had one, but it would have been a little harder road for me. So thank you guys for all that you're doing. Appreciate it. And thank you for the invitation. I look forward to sharing with you some information about Staghorn and myself. So I'm a Tulsa kid. I grew up in Tulsa. I always thought I'd end up leaving there, being in the oil and gas business, but I've kind of changed jobs here and there to avoid that. And my current position at Staghorn, the whole plan of that was to kind of control my destiny. Apache left town, Newfield left town. So in 2015, Staghorn Petroleum got formed, and I was a part of that. At that time, it was 97% private equity owned and 3% management and employee owned. So we were, what I thought was controlling my destiny, ended up not quite being exactly what I thought. So we built up an asset over a 2-year period, sold that asset in Northeast Kingfisher, put together an acreage position, drilled a handful of wells, and then sold that asset to Chisholm. At that point, we had a remaining asset in Northwest Stack, major Blaine Dewey counties, so we proceeded to work that asset, grow the position, drilled 16 wells with an IOG drill co. That was when Staghorn Petroleum 2 got formed after the sale. So we kind of trucked down that road. Well, it became pretty evident that our equity provider was in a position where they wanted to exit Oklahoma. So they did a handful of things. They merged another company, Council Oak Resources, got merged into us in 2019. Shortly after that, they basically said, you guys just need to put all these assets up for sale. We're going to sell the asset and just get out of this. And so, at that point, I realized, man, this isn't for the long haul. And so fortunately for us, we really, as a management team and as an employee group, we believed in the asset we had, we believed in the team we had, and we didn't want it to stop. So what we did is we did put the asset for sale. There was a bid, there were bids that were made. We ended up buying the asset from InCap ourselves. And kind of getting out from under the private equity model. The unfortunate thing was that was in January of 2020. So we kind of wrote personal notes and did all this stuff to buy InCap out, got a decent deal. And then, so if you recall, that's when the first COVID cases in the U.S. were occurring in March. The OPEC Plus flooded the market and really put us in a pinch. So we made hard decisions. We cut staff, we cut salaries. We were fortunately able to find another private company to come in and buy some equity in March of 2020. So just eke by, just survived. So at that point, we're looking at, prior to that, we were thinking we just need to service our debt. So we used reserve-based lending to buy the asset. But what we did is once we got that equity investment, we basically it gave us a breath of fresh air. We were above water. So we started looking at that point, prices were at the rock bottom. We started looking at acquisitions. We look at the opportunities available at the time. And so at that time, drilling wells was not an option, so acquisitions. So we were fortunate. We found There were two acquisitions we made in 2020. One was Carrera Resources, which was also an in-cap company that we had been trying to acquire, but there were conflicts within in-cap and they wouldn't let us. So since we were out of their umbrella, we were able to acquire that company for at the bottom of the strip price deck. The second acquisition we made was Riviera, which was a huge acquisition for us. They had decided that they were cashing out and going to just return money to their shareholders and be done. We made that acquisition in October of 20. That basically, it was tripled our position. We had maybe 300 operated wells at the time. It went to 900. I mean, it was a huge undertaking for us, but it ended up being a great deal. So kind of fast forward the next year, 2021, we spent integrating that asset in, evaluating what we got. A ton of HBP'd acreage came with it. And so we were just working on that, working on paying our debt down. So January, basically January of 22, we had the debt that we had undertaken to buy in-cap out and those acquisitions we had returned, was paid off. Just prior to that, in late 21, throughout that year, we realized basically we're no longer competitive in acquisitions, so we need to shift our focus. Now we need to look at the assets that we've acquired, look internally, find some drilling prospects, and start growing through the drill bit. So that's what we did. And our strategy in drilling is, what we've kind of settled on is we want to live within cash flow or minimal debt, and we want to minimize risks. So what we'll do is we'll drill wells in batches, 5, 6, 7 wells. We'll do it with cash flow that we've built up. And we'll do several things. We'll test new concepts, but we'll only do it one at a time. We do not want to get out ahead of ourselves before we know the results of a new idea or a new play. So that's basically been our strategy for the past couple of years. Since we took that over, we drilled kind of in 2 batches. We had a 7-well program from 21 to 22, and then we paused, built up our cash position, and then started drilling again about a year ago and finished that in April, and now we've picked up a rig again here in just recently. But there's several things that we've learned along the way because we used reserve-based lending, debt lending to finance this stuff. There were times during the downturn or during the COVID and the low prices that we were forced to hedge, and so historically, we have never layered hedges on, and going forward, that's our plan. So there's been 1 year that we've had hedges that we made money on. It was 2020. We made $100,000 a month, so $1.2 million. If you look at all the other years that we paid out on hedges, it's in the millions of dollars the other way. So it has never worked out to our benefit. That's not to say there aren't some instances where we will layer hedges on, but when we're at the mercy of the bank to layer those hedges on based on our covenants, it definitely puts you in a position you don't necessarily want to be in. Fortunately, prices were good. We were okay to pay paying those hedges made us feel okay. But going forward, we don't want that is our strategy, is to just not hedge as long as we can. And with that, we've based our decisions on our debt level. So now it's tiered. We basically don't have to hedge until we get to a certain debt level, and so we just make sure we stay underneath that debt level. The other thing that we did after we acquired Riviera is we kind of looked around and said, well, everything's cheap right now. Services are cheap, equipment's cheap, everybody's getting out of the business. I mean, companies were changing hands right and left, and so we said, how can we control our destiny and make sure we have the things that we need to maintain this asset that we just acquired? So we purchased a workover rig, kind of diversified a little bit and vertically integrated, and used that workover rig just to run and maintain the asset that we had built up. And it's actually been a good venture for us, because there were times during that period where we were unable to find workover rigs, or there was a shortfall, and luckily we had one of our own to rely on. It's definitely not it's not really a profit center for us. It does cover its cost and pay the debt that it's taken on, but it's not, we're really utilizing it as a way to control our destiny. To further that, about a year after that, we acquired 4 water trucks. Same story. We're just trying to make sure we can keep our wells running, our assets running, and maybe bring some of the margin back into our house, and keep it in our pocket. Those have been 2 interesting ventures. There's definitely a layer of complication when you're adding the employees, keeping track of drug testing and all that stuff. We were 12 people in an office, 2 people in the field. It was a very small operation. So you layer in the 8 truck drivers and 4 rig hands, and it's just something we hadn't done, and it's worked out good, but definitely some new challenges. The other thing that we did, so when we acquired these properties, mostly the Riviera ones, they came with a lot of, a whole bunch of liabilities, a lot of wells that were inactive and had been inactive for many years. Obviously, when we evaluate the asset, we take that into account, but what we saw in the past few years is high salvage costs. You couldn't find pipes not available, so salvage prices were high on everything. So we started plugging wells and have been for a little over a year now, just chucking away at getting rid of those liabilities and cleaning up the asset for multiple reasons. One, there's a list of those wells that the OCC was requiring us to do. There's a list that the landowners are complaining, griping about, wanting restored. But two, it's cleaning up our balance sheet, cleaning up the asset. So if we do get in a position where we want to sell it in the future, it's ready to go. And while it's definitely non-performing capital, it does feel good to clean up the mess. I mean, that's our responsibility as operators to make sure we plug the wells properly, when the time comes. So we've been focused on that, and we'll continue that as long as it makes sense to do so. Another thing that I think we pride ourselves on, or I do, I guess anyway, and Staghorn, the team as a whole, has been this way as well. We really value our relationships with vendors and consultants. There's several groups that we outsource. We outsource accounting, we outsource our drilling and our completions. So Basin Engineering does our drilling and completions, and we really treat those not as vendor-customer relationships, but as partnerships, because we can't get a lot of this stuff done without them, and if they're not making money, then they're not going to be around to help us when we need it. And so we're all about sharing margins when there's margins to share. So I don't mind, trust me, I don't love price increases by any means, but if we're making money because prices go up and the vendors are struggling, that doesn't make sense, and that's not going to last a long time. So we want everybody to succeed and be successful, and we see it, we understand that, and we kind of embrace it. And really a lot of these relationships that we have truly turned into partnerships. We've got a marketing group, and we've got a partnership going on with them, a JV operation. So they really, taking care of the people you work with makes a lot of sense, and has worked well for us in the past. As far as our future plans, so we actually last summer, we found there's an acreage position in Caddo County that we acquired from Riviera, and underneath it is some good Woodford acreage, and so we basically put together a Woodford prospect, and we, like several others, are long on gas. We think that's really going to be a part of the energy transition, for lack of a better word. It's going to be hard for the U.S. economy to operate without oil and gas, and I think specifically gas. So we put together a position. We've done a lot of the OCC work, and we're drilling our first well right now. Obviously, the prices don't look terribly great for the prospect right now, but we just need to test the concept, and the plan is hopefully that prices do come up the way we think they will, and we'll get after it and keep a rig running in this area for an indefinite period of time starting next summer. Other than that, we're also, obviously oil prices, the predominant percentage of our revenue comes from oil right now, so we're always looking for oil prospects. Those are definitely harder to find. There's not a lot of big giant oil fields left to drill, a lot of one-off wells here and there. And then that's one thing that we've also kind of prided ourselves on, is there's no deal too small. I mean, we've done a whole bunch of one-off farm-ins, farm-outs with Unit, Titan Resources, and those are just a couple that we've done recently. So we're always, if somebody's got an idea and doesn't have the means to implement it themselves, and we've got that expertise, and we look at anything. So that's something that nothing's too small in our eyes. So we like to take advantage of any and every opportunity that comes in front of us. I guess that's about it. All of our operations are in Oklahoma, so we're an Oklahoma-only company at this point. I know a lot of you guys out here, but if you've got any questions, I think that's kind of the strategies we've been using, and the ones that have been working to keep us in existence for the past 3 or 4 years. Nope. All right. Thank you. All right, go ahead.
How many of y'all are operators for rig fans? Like you, Annette, Saravale Service Companies, rig fans. Thank y'all for being here. Manny touched on so many things that's so important to all of us here. the idea of partnerships and strategies. You know, moving forward, many of the service companies, many of the operators, you know, we all have this, you know, worry about the future of Oklahoma and keeping operations running here, of course. So, you know, with companies like yours, or do you think in the future, you know, a lot of operators would look at partnerships and not just those margins increasing and invoicing a little bit higher, but maybe have pieces of the well in perpetuity? Hey, like, I may not be able to pay an invoice right now, or you can't survive without invoicing me and keeping it at full staff, but why don't we do this together, and this is our well? You know, do you think that's a viable future to keep the ups and downs from being so rocky for so many service companies in this room?
That's a great question, and I think the short answer is, you know, that's something that we would entertain. And we, you know, we've looked at deals, like I said, no deal's too small, no deal's too unique. We've done really odd things in the past, and that's not something, I know it wasn't Staghorn, it was Council Oak, but when we absorbed them, some of the guys came along with it. I mean, they worked with Halliburton back, and it was something very similar to that, where Halliburton was going to invest in wells, they would provide the frac services, and they would have equity ownership in those wells, or working interest ownership in those wells going forward. So absolutely, I think we would be open to that, and my guess is most everybody would be. I would caution that I don't know that would smooth out the balance sheet, because we go through the same, you know, we see, as operators, we see the same cycles. They're just that our valleys are your peaks and your peaks are our valleys. So it's a challenge, and you know, the problem I see is that those cycles are getting shorter, and so you know, one of you guys said everybody should be drilling right now. Prices are high and costs are low, and it's just, you know, for how long? You really have to be nimble and be ready to go when things turn, you know, when they look good, like right now, and be ready to stop when they're not. And it doesn't always work that way. And but the short cycles are making it hard on all of us, operators, vendors, and so we just. I don't have a great answer for that, but we definitely see it, and you know, we spend hours speculating on what prices are going to do, and it's just a waste of time. We're never right. So anyway, if you guys got the answer to that, please come find me and tell it to me.
How much can we bill for that?
Yeah, right. You wouldn't need to. All right, thank you guys. I appreciate the time.
Thank you guys, great speakers. Thank all of you for coming. On behalf of myself and our other API officers, thank you guys for coming out for our 90th anniversary kickoff, and we hope to see you next month with Congresswoman Bice, which I think is the 12th of October. Thanks again for coming, and we'll see you later.